And we are live. Ladies and gentlemen, welcome to Trades by Bren. We're going to be day trading the SP 500 futures. We got an uptrend. We've got an uptrend. The bulls are running. The bulls are running. But we're going to be patient because there's been a lot of up. So we'll be patient. We'll let it come. Let the game come to us. But we are bullish. This is the S&P 500 futures. Thank you for being here. And we're back. Okay, so this is the daily chart, right? And look what's happened in the past few days. 252 points up since Friday, last Friday the 19th. Well, Friday the 19th, okay? So that's our bull trend, right? You can just connect the lows. And what happened yesterday, well, Friday rather, okay? Now we were down here and I'm like, okay, the bears are, it's still bearish to me when we're here, right? And even when we're here, because the bulls just, if you're day trading, you got to weigh the probabilities. You got to say who's stronger, the bears or the bulls, right? And if you see that, right, at least if I see that, and then I see that one bull bar right here, I'm like, okay, not convinced, right? But then I see that the bulls close pretty strongly above the moving average. And then the last 2 days, very convincing. Now, what do you notice about this chart? At least I'll tell you what I notice. I see these gaps. Do you see the gap in between the close of this candle and the open of this candle? Do you see that? Sorry, I gotta check the chat. Just a second, guys. There we go. Okay, now I see it. And we're back. Okay, good. So you can see a gap in between the close, right, of this candle and that candle, and then you see it again, right? It's very subtle. It's very subtle, right? This is something one of the many things I learned from Al Brooks. These little subtle things sometimes can tell you a lot. So there's a gap here, right, between the close of this candle and the open of this candle. So what that tells you is that as soon as this candle closed, there were bulls that smashed their buy orders. As soon as this candle closed, they smashed their buy orders. And they're like, we want to buy. And that shoots the price up. And that means that between the close of this candle and the open of this candle, there was a gap. And that shows you conviction on the bulls. It shows you eager bulls, right? And that's what you want to see if you're long. That's a sign. There's signs of bullishness, then there's strong signs of bullishness. Now, the fact that we got 2 gaps in a row, I'm trying to get the other one on there, but oh. Right, we'll mark them in there. The fact that there was one and then another one shows you that there were even more bulls that did that here, right? Because the gap was even bigger down there. Why? Because there's a better price, right? So we're bullish, okay? And you know, we're in a trading range environment. So we gotta change this to yellow, okay? Because we haven't broken above this high yet. However, we are currently bullish, right? And you know, I'm gonna be hesitant to sell. If I do sell, it'll be a scalp. But yeah, I don't know. I mean, look. This is the open of the day right here. Lower low double bottom, bull start buying here, right? If you look at yesterday was kind of interesting. We're in this tight trading range for most of the day. That was 3 hours. That's a long time, right? It's like half the day. But look, what do you notice? We never went below the low of the day. So technically this was a bull trend day. Technically we were trending all day. You know, on 35 here, we did get very close to the low of the day, right? Within 5 or 6 points, okay? But the bulls kept the price from getting more than a few points below the moving average, that's the blue line, and kept that trend going up all day. So it was a small day, but it was good for the bulls. 37 points up. And then what do you notice today? We've got a gap up open. Okay, we marked that green. Not a huge gap up. 11 points. Okay. And then now what? We've got we've got a lower low double bottom. Bulls start buying. 2 consecutive bull bars. So if I had to be something right now, I'd be long. But I want to wait. I want to wait and see. Because a lot of times when you get a lot of up, you get some relief, right? You get pullbacks, right? See if we can find something similar. I mean, maybe this rally, right? Like maybe here. Maybe that's a little bit similar, right? But notice once you start getting consecutive bull bars, like here, right? Same with here. See, that's kind of similar to this, isn't it? Right? So little to no reason to be short. I'm gonna be hesitant to sell. Maybe for a small scalp, but there's degrees of bullishness, right? There's, you know, kind of weak bull trends, there's strong bull trends. As you know, as far as I can see, I don't know what you see, but I see a strong bull trend. That's what I see. You know, in trading, being right is not as important as just like being clear on what you see. That's something I keep learning every day. Two consecutive bull bars after a push down, a couple pushes down. Will the bulls get the breakout to the upside? Let's see. Bathroom break. And we're back. Bull's getting 3 consecutive bull bars. Decent long entry. But near the top of this trading range. Tight trading range. Overall bull trend. 8-point stop. Reasonable entry. Reasonable entry. There we go. We gotta adjust some shit here. No. No.
Nice job, Katie.
Hello, hello, hello. Technical issues. Cannot get this thing going. Oh well. Oh well, oh well, oh well, oh well. Long entry. Couple options for profit targets. According to my system, stop loss goes below the bull leg. Okay, so this is, if we consider this the first bull leg here, stop loss goes down here. And then you got, in my system, you got two options for profit targets. You can do a measured move of this trading range. Okay. Or you can just go for 2 times your risk, right? See that 2? That means stop loss 7.5, 15 points. So that's an option. Now, the thing you want to be aware of after the market's been going up, Things usually go sideways for a little bit, right? So you see that. You know, sometimes you get something like this. But often you'll get a little sideways. You get a little pause. This is the daily chart, mind you. We switch to a 1 hour. You know, we're just pausing. Stop entry. Wow, look at 11. Notice 11 sold off 5 points. Bulls start buying immediately. Okay, so we're still strongly bullish. Probability shifting towards a breakout to the upside. Trend continuation. I mean, technically we're in a bull trend on a higher time frame, but we're trading the 5-minute chart, so the daily chart's not gonna have too much to do with things other than we'll probably close the day higher, right? But in the meantime, who the fuck knows? 20 minutes into the day, time for a check-in. Full trend day. Yep, yesterday and day before. If you look at yesterday, it was basically a trading range for, 3 hours. I was pointing that out. See that? That's essentially a trading range. We did not get to the bottom. We continue to get higher lows. But this low broke this low, okay? So this is technically a trading range. It's just a bullish trading range. There's a lot of selling and a lot of buying here. There just happens to be a little more buying than selling, slightly more. So the odds slightly favor the bulls here, but look, that was 2 hours and 55 minutes before we got the breakout to the upside. So reasonable long entry there. Stop entry means you're going to take it for a swing, which means, you'll be willing to wait an hour or two to get that fill, to get that profit target filled rather. That's how I trade anyway. If you're not patient, don't day trade. That's my best advice. If you're not patient, pick another hobby. Hmm. If we get down to the moving average, we would expect to find buyers there. I mean, just look to the left. What happened every time we got to the EMA?
Black giggle.
Black giggle. I wish I'd get my chart working. I'm not sure what's up. So annoying. Bitcoin. This is a chart I've been sharing with you guys. Our mark support is down here because that was a prior low. We broke strongly below that. But then what happened? Boom. Exploded to the upside. And now holding above the moving average. So going sideways, but holding above the moving average. So I would say Bitcoin now bullish. And if we're seeing this is the bottom of the trading range, right? Could do that. We would just extend that.
Black giggle.
Right. So now we're actually kind of close to the middle of the trading range. Still the bottom half though. Right. So reasonable buy if you're seeing this as a trading range. But that was a big move down. Right. From here to here. Yeah, that was 25 days. 23, 24, 25 days of down. Except for that little rally there, but people think Bitcoin's so bullish, but you know, until the bulls get, you know, strong trend continuation, it's still not that bullish, right? It's more of a trading range in my view.
Black giggle.
Like as far as I could tell, and why? Because we keep going, because we keep getting big moves down and then big moves up and big moves down. I mean, this is technically a bear channel, right? So I was bearish when we were doing this. That's why I drew that line. You can actually extend this, right? Okay. So when Bitcoin was doing this, right? Okay. Then it's bearish. To me, I see that as a bear channel. But now that we've gotten consecutive closes, we've broken that trend line and we're getting consecutive closes above it, I'm back to bullish. So that's how I see that. Obviously, everyone's going to interpret that in their own way, but that's how I see it. I like trend lines. People get so fancy with the charts and the indicators. I like to keep it simple. But there's some way to get this fucking chart working. Let's see if I can get this chart working, guys. Give me a second here. Feeling good, feeling great. Feeling great, feeling good, feeling good, feeling great. How are you? Okay. Mark my words, baby. Let's see if this fixes it. 5, 4. There we go. Okay. Ah. Okay, cool. We are in business. We are in business, baby. Trade station's working. So Bulls lacking conviction here. This is just a little test order. Make sure my broker is working. So Dark Q. Trading range, price action. That means sideways. That means up and down. That means bears and bulls both participating. No one really confident. I just ran this little test order here, so you know, I threw in a little micro contract long, but you see lots of tails. They call this chop. Chop, 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 chop. Trading range means expect reversals. Technically, the bulls got a higher low here, but actually, technically, it looks pretty good as far as the bulls are concerned. Bears really not doing shit, right? So, like 15, you know, like if the Bears were gonna get a move down, 15 was the second attempt from the Bears, right? Decent attempt here from the Bears, right? They retraced the whole trading range. Not the whole trading range, but like almost all of it. Like more than half. It's such a tight little trading range. 10-point tight trading range. Right? So, there's really not much going on but sideways here. And life is good. Life is good. Life is beautiful. Grateful to be alive. Happy to be here. Happy to be here with you. Tell me what city you're watching from in the chat. Tell me what city you're watching from in the comments. This is day trading right now. Okay, so here we go. Bulls, here we go. Buyers in the bottom portion of the trading range. So what that shows me is that this is a channel. And of course it makes sense to be a channel. Because after you get a strong trend transitions into a channel. Guys, let me know what city you are watching from in the comments. Now, 16, look at this, last minute of the candle. Undoing the damage the bears did on 10 and 11. Bulls coming right back, like, fuck you, bears. Look at this. Remember I said this was the valid stop entry, long. Looks like Bulls trying to get the breakout to the upside. You know, there we go. But will they get follow through? That's the question, right? I mean, it's good enough. You gotta be quick on the draw with these things. And again, another stop entry. A better stop entry, to be honest. Bulls trying to get the breakout above the trading range. Struggling. But 16 closed above, you know, almost all the prior bars to the left since the open. Wait. Yeah. You know, Bulls, 16 closed above all these candles except for 2. So Bulls need to get follow through, but that's a higher low, right? Counter logic. Sellers at the high. Counter logic, sellers at the high. But this is a trade I'd be willing to long and then just kind of hang on for a while. Right. Come back. Give it an hour. My favorite trades. Get long, come back in an hour. My favorite trade. So that will put us at 850. $15-minute chart. Obvious bull channel. On the 15-minute chart, look at the bull candle relative to the bear candles, right? Look at the white bars relative to the black bars. It's just so obvious if you switch to a higher time frame. Now this is assuming, okay, on the 15-minute chart, we've got 6 minutes left on this candle, right? So it's assuming that 6 closes strongly bullish. So we don't want to jump to conclusions. Big mistake. And I made that mistake before, so we will not do that. But so far, so good. Check in. Ugh, so annoying. Okay. Mental game checkpoint. 754. Long. After bears failed to get lower low. And then strong bull close. Long 3. PT measure move of trading range. Oh, will hold for 1 hour and re-evaluate. Calm. At ease. Okay, so we got a few questions. Shout out to my man Anthony. Shout out to my man Amir. Big shout out to Egypt. What's up, baby? So Anthony, okay. My entry is not necessarily. Good question, Anthony. Anthony's asking if it breaks out of the range to either side and then the retest, that's the entry I'm looking for. It's a good question. What I'm looking for here, to be clear, I wanted to see how strong the bears are, right? So the reason why I got long here is because you could see that the bears tried to get a move down. The bulls held them. The bears could not even get to the moving average, right? So that means there's buyers above the moving average to protect this area. And then the bears tried again, if you notice, right? So I'm trying to see how strong the bears are relative to the bulls, right? And then I mean, to me, 9 was good enough for an entry because you had 3 pushes down, which is a wedge, and a lower low double bottom with 1 and 7. Okay. However, it's still a little bit early, and this is a tight trading range. So I'm still kind of waiting, right? So then once I saw 15, right? 10, 11, 12 is a bear leg. Okay. And usually markets move in you get 2-legged moves, right? So once 10, 11, and 12, the bears want to get follow through. So that's leg 1. Okay. So I count legs, right? Leg 1, leg 2. And I'm looking at the strength of leg 2. Now, if the strength of leg 2 is strong, then the bears are gaining momentum. So I'm trying to see, is there buying pressure or selling pressure, right? And the bears got some selling pressure here because they got 3 consecutive bear bars. Anytime you see consecutive bars, that's, you know, a good sign for that side, right? But notice that 12 was not bigger than 10, right? And then when the bears tried again on 15, this is all they could do. So they were strong here, and they were strong in the sense that they got 3 consecutive bear bars down. But then if they're gaining strength and if selling pressure is growing, then 15 would be in equal size to this or bigger than this, right? But 15 is puny, which shows you that the bears are losing strength. And then once 16 comes in and basically retraces almost this entire trading range, and we get a really strong bull close, and there's buying into the close of this candle, that confirms what my premise is here. And so that's why I get long here. Okay. Now there's a likelihood, as I said, that there would be sellers at the high, but look what happened on 17, right? Bulls got follow through. So now that the bulls are getting follow through, we've broken above the trading range. And so that makes a good case for me to hold this long. But either way, when I see something like this on the open within the first 18 bars of the day, this to me is what I consider a swing. Okay, and a swing for me is holding for an hour or two. Okay, so my favorite trade is to wait for a setup like this or like this, what I call stop entry. Okay, those are considered stop entries because they're when the market, when the bulls are, it's the potential start of a trend. That's what a stop entry is. Okay, a stop entry is the potential start of a trend. That's what a stop entry is. Because why would you use a stop entry? Why would you use a stop order to enter a trade? The only reason why you do that is you would think the price is going to go higher, right? And you're confident it's going to do that. You're very confident it's going to do that. A stop order means you have high conviction because you're saying, hey, I'm going to get in as the price is going up, right? You're not just trying to get a quick move. So what I'm looking for and what I'll be looking for are these stop entries. So what I want to do is I want to catch the beginning of a trend, and I just want to be able to kind of hang out for an hour and withstand some pullbacks and hold for that measure move profit target. Honestly, that's when I do my best trading. 3 consecutive bull bars. I mean, so far so good, right? Yeah, don't predict the market. Yeah, so what I'm saying, Anthony, is I'm trading the signals, right? And so what do the signals tell me? This signal tells me that this could be the start of a trend. Now, the start of the trend actually could have been down here, right? And if you look, well, you're getting higher lows, aren't you? Look, you could just connect them. Okay, so maybe the trend started here, but I like to have a good, if I'm entering for a trend, right? And I want to hold for like 15, 20 points on the ES. I want a strong bull bar closing on its high. Okay. Because that means that the institutions are buying. And that means I'm just hitching a ride. I'm like, let's go, boys. Right? I don't want to be the first one to buy. I am not smarter than the institutions. The market makers. I am not smarter than the market makers. So that means a big, strong bull bar closing on its high. I'm like, all right, cool. The institutions have conviction. Let's go. But the context has to be good. So that's what I'm pointing out here. Context is the trading range here, right? Because, we went up, we went down. We went down, we went back up, right? So we're ranging here, right? But I know that the market tries to reverse usually around bar 18. And after bar 8 is when the market usually starts to find a direction on the ES, okay? So after bar 8, I'm starting to look for my entry. And like I said, that was the first one I identified, but waiting for this one, was a good idea, because if I entered here, I would have had to take that drawdown, which would have been fine. I mean, we got a higher low. It's no problem. But this was a better entry because look, no drawdown. I don't know, maybe I took a point of a drawdown or something. One of the things I've been thinking a lot about lately is one of the things I've been thinking a lot about lately is how to minimize stress. How can I adjust the way I'm trading so that I'm happier? How can I adjust my trading so that it's just a breeze? How can I, and this is something to ask yourself as well, how can you adjust the way you're trading to make it suck less? What are the shitty parts of trading? And is there a way to make some modifications so that you could just remove them? You can remove the shitty parts. You can't remove all the shitty parts. But is it possible? Is it possible to remove some of them? Is it possible to set up your trading to do it in a way that just works for you and your style and your personality and your temperament? If you guys have watched my stream, you know that I've been doing a lot of scalping lately, but scalping's a little bit stressful for me. Sometimes. I mean, it's only stressful when it doesn't work, right? But, with scalping, you have to take a lot more trades. With the swing, I can get, on the ES, I can get 15, 20 points and just like chill for an hour or two, right? That's cool, man. I love that. Okay, so Anthony, I'm never more than 60% confident. I'm never more than 60% confident. And I don't believe that you or anyone in trading should ever be more than 60% confident, because of the trade, that means there's someone who thinks the opposite side, right? So I'm 60% confident that this trade will work out. And you saw me break this down, right? You're seeing what I'm seeing, that the bulls definitely have control here, and the bulls are basically the bears who thought they would be shorting here are trapped now, and they're probably trying to panic out of their shorts. Maybe. Okay. That's what it looks like, but we'll see. Okay. So I think this trade has a 60% chance of working out just because the buying pressure is stronger than the selling pressure. Look at the bull bars on the chart since 16. And then look at 19 relative to 18 and 17 and 16. So I think there's a 60% chance. When you're trading, it's like you want to know that it's more likely than not that trade's going to work out, right? So that's what 60% means. We might be 65%, 70% on this. As we continue to get more bull bars, that probability can go up slightly. But, it's not going to go up more than, say, 60, 65, 70%. I mean, it might for very short moments in time, right? Like, for example, when this bar closed, there was definitely more than a 60% chance that we were going to get to that high, right? But that was a very short moment in time. So as a general rule of thumb, okay, and again, I learned this in almost everything I know from Dr. L. Brooks. He's like, you should never be more than 60% certain of anything in trading. And I believe that to be the case, because because of the nature of what we're doing. It's a trade, motherfuckers. There's someone else who thinks they're right and they think the opposite. That's literally how this works. I think people forget that, myself included, from time to time. So it's a good reminder. You know, I'm working on a new video right now, breaking down some scalping strategy, and I'll be publishing that this week. And I talk about in the trade, I talk about, you know, when you're unwilling to lose, when you're just unwilling to lose and you just can't, and you just keep trying to avoid losing, you get in a trade, the second it starts to go against you, you panic out. You get back in, it goes against you again, you panic out. When you're unwilling to lose and you start acting shaky like that, squirmish, you can't seem to pull out a full win. But the second you say, at least for me, the second I say I'm willing to lose, and I'm just gonna set my stop loss and give this trade time to work, usually I end up winning more often than not when I do that. When I'm willing to lose and just set my profit target and my stop loss and kind of let the trade work, give it time to do that, things tend to work out well when I do that. Not always, but often. It's kind of like, I was thinking about an analogy. It's kind of like if there's a girl that you want to go on a date with and she's like kind of on the fence and you're like, hey, why don't you, you're like being persistent, right? Inviting her out, making invitations, making her laugh, giving her all this attention. And she's just kind of on the fence and she's just not coming around. And then after a while, you just almost like give up and you're like, oh, whatever. You kind of forget about her. And then somewhere out of the blue, she hits you up. Hey, how about that date? And you're like, oh shit. Let her come to me. Let her come to me, rather. It's kind of like that. When you can kind of let go a little bit and give the market time to do its thing. Things tend to go pretty well that way. Anthony, question: how do you get over losing streaks? Yeah, that's tough. You have to journal. You have to journal. You absolutely have to journal. And you have to record your trades. You have to screen record your trades. And you have to write down everything that happened on the chart. What you did, how you managed the trade. Most importantly, you know, those losing streaks are happening because of trade management. So you have to go back to the recording, and there's no way to do this with your memory. Impossible. Right? Even if you turn the executions on your chart, what you need to know is you know, what you are doing in between your entry and your exit, right? That's trade management. Like, were you just kind of chilling with your hands off the mouse and keyboard like I'm doing now? Or were you, you know, kind of fidgeting? Were you changing? Were you tightening your stop? Like, what were you doing, right? You got to journal all that. You literally have to write down every single thing that happened. At least this is what works for me, okay? Really, I can just tell you what works for me, but I did get this from Jared Tendler, author of The Mental Game of Trading, and I didn't understand how to handle losing streaks until I started working with him. And since I've been working with him now for a couple years, probably a year and a half, he convinced me that doing a intense journal session after those losses is the only way to break through. And I tested it out. I tried everything. I tried working out. I tried meditation. I tried yoga classes. I tried massage. Like, I tried doing all these different things. But the only thing that really helped me work through that stuff is by sucking it up and just writing out every single detail. Two types of things. One, everything I did technically, and then all the mental game stuff. My thoughts, feelings, emotions. If you want to use this as a little bit of a guideline, you can use this, right? Actions, thoughts, emotions, perceptions, decisions, right? Those would be the things to mark down. And if you go to the Mental Game of Trading website, Jared Tendler's website, if you just Google it, you'll see it. He's got free worksheets there. So what we're talking about is data collection for your mental game, for your mind and emotions and your technicals. So you collect all the data for your, you collect all the data, basically every single data point that you can find, every single thing that you thought, every single thing that you felt, and then also everything that happened technically, right? I entered here, I thought this was gonna happen, then that happened, then I did this, etc., etc., etc. You just have to start doing that for every single trade and every single day, every single trading session. That'll get you a good portion of the way through that losing streak. And then what I would do is well, let me just give you that. Honestly, just start with that. That's hard enough to kind of get in the habit of doing. But I've got a part 2 on that recommendation. If you get through that part, let me know. Losing streaks are tough, trust me. I know. Looking for a decent bull close here. Trade went my way. Looking good. Holding till 850 is the plan. Chilling. Yeah, that's all. Okay, so Anthony, it's a brain dump. So you think of what's happening for you, okay, and for me, and for anyone that's trading when they're losing and they're having emotional difficulty, right? What starts to happen, Anthony, is undigested food, like it's like undigested food in your stomach, okay? Pretty much the same thing as eating something really heavy, right? You know, you eat something really heavy and you get indigestion. You've got emotional indigestion. So the purpose of writing all that shit down isn't necessarily to go back and read it, although you can, and maybe you want to do that. But the main purpose of that is to get those emotions processed. Because when the emotions become strong, they stick. They got a stickiness to them. You notice? You start kind of ruminating on the shit, thinking about it. It's like you're with your girl, or you're with your family, or you're with whatever. And it's like that trade that you lost and the thing is still on your mind. So the brain dumper, they're journaling. This is my BDA journal, right? Before, during, after. So I'll journal before, during, and after. Okay, you see me doing it during here, but I'll also do it after. We're talking about the after, right? And this is my after action report, which I can show you. I just write what happened, right? What happened? And I'll see if I can list what went well, mistakes made, options I faced, opposition I faced, right? Challenges, and then learned or relearned, and then accumulated emotion, right? Like I'm noticing I'm still feeling frustrated because whatever, and etc., etc., etc. So the journaling helps process. It's like Tums. It's like Tums for your feelings. It's like Tums for your feels. The BDA journaling's like Tums for your feels. And it just helps get it processed. So it's really not so much about rereading it as much as running the garbage disposal, if you get what I'm saying. My premise is that this is a channel. And if it is a channel, what we'd expect to see is kind of like this. When we get to new highs, we go sideways a little bit, pull back, market goes down, finds more buyers somewhere a little bit lower, and then we continue up and do the same thing. What did I say we're gonna end? 8:10. Okay. This is like my favorite beat, I think. Free blueberry Fago. Anthony, thanks, bro. I appreciate you, man. A lot of credit goes to Jared Tendler on that. He wrote a great book and he's really helped me a lot. And he's got this great community, The Mental Game of Trading Live, so you can join that if you're curious. Click your buttons, making money, baby. Ooh, that sounds good. Saxophone? When that beat hits so sweet, you just gotta scrunch up your face like... Man, we're getting classy, smoothing it out here on Trades by Brent. Profit target number 2. Mark my words. Bull's not failing. Price just hitting a wall here. Retracing back to your entry. Minute 30 on the candle. Let's see what happens here. I imagine we'll find bars at the EMA. Notice this trend line. At least this is what I'm noticing. Notice this trend line almost perfectly lines up with the EMA. Isn't that cool? So I think there is a good chance there will be bars at the EMA if we even get there. I gotta take a piss. I'll be right back, guys. I've been holding it. One, two. What, one, two. What, one, two. What, one, two. So the good news on this trade is that our stop loss is below the EMA, and that because the price is trending up, the EMA is getting higher, right? The EMA is getting pulled up. If the price is going higher, that means the EMA's moving in an up direction, right? So like over time, the EMA would be moving up, right? Because that's basically the trend line, essentially. As you can see, like the green line on my chart is kind of, it's almost identical to the moving average. So you can use the moving average as a trend line in a sense, right? And the moving average is support in a bull trend. That's what bull trend means. It means that there's more buyers than sellers. So that would mean that there's more bars above the moving average, right? Technically, that's what it looks like. So the good news on this trade is our stop is below the moving average. And if the market's bullish, it means that it's more likely than not that there'll be buyers at the moving average and above the moving average. So we're in a good position on this trade. And you know, this far into a trade, like 30 minutes or whatever, I've been in this trade, I'm just asking myself, okay, what are my expectations? And I mentioned my expectations are that this will be a channel, because after a strong bull trend, you get strong breakouts, strong trends devolve into weaker trends. And so a strong trend would be a small pullback trend, which would be going up real strongly, right? And you'd have these small little pullbacks because the bulls are so strong, right? And then over time, the pullbacks would get bigger. And instead of just going up really strongly, it would, you know, you get bigger pullbacks and we'd still be drifting up, but there'd be more sideways and then some drifting up and then sideways and then bigger pullbacks and more drifting up, right? So that's channel behavior. And all that happens when that happens, my understanding is that the bulls go from buying at new highs, because when the market's strongly bullish and we're breaking out and we're just exploding to the upside, bulls are willing to buy at new highs because they're so confident the price will go up, right? And then that keeps happening, and then more bulls come in and we just keep pushing higher and higher and higher. But then over time, bulls start taking profits and they know that that trend's not going to go up forever. So they stop being willing to buy at new highs and they start buying pullbacks, which means they're taking profits in new highs instead of buying at new highs, which means they're selling at new highs, which is what you see happening here. Look at 18, 19, 20, 21, 22, right? So what we're waiting for here and what we would expect to see is we'd go lower, and then at some point lower, we'd find bars would come in, right? And that's how you get a higher low. And that's how you go from a strong trend, type 1, to a weak trend, type 2, or weaker. 2 types of trends. My trade plan is to hold until 11:50. Or 20 minutes left. If this trade is still open at 20 minutes from now, I will reevaluate. Most likely just tighten that stop. These trading ranges usually last about 15 bars. So maybe we don't get train resumption until here. But let's see. Honestly, just be curious. From there to there's 15 candles. Anthony, thanks for being here. I appreciate you, my brother. I'll see you on Thursday. We do this every Thursday, 7 a.m. Every Tuesday, 7 a.m. Pacific. Every Tuesday and Thursday, 7 a.m. Pacific. Be here. Join the family. Mark my words. Tuesday, May 7th. The more we go sideways, the more we pull that moving average towards the price. As I said, I would expect there to be buyers at the moving average. And if I'm swinging, which I'm doing now, which means planning to hold for an hour or so, I'm expecting the trade to go against me at least once, probably once. And if I'm holding, for that hour, I'm just gonna sit through that. "12 seconds on the candle, getting right up to that moving average. Selling pressure, slightly increasing, right? 25 is a little bit bigger than 24. 24 closed on its low. 25 bars are getting bigger, right? But we're right at that moving average, and I would expect there to be buyers here. If you look at the chart, just overall, bulls have been buying above the moving average all morning. So what happens when we get to the moving average? Do they start? Do they start really buying? Makes sense. Question. Hello from Mr. Money Mouse. Is this the right place to be if you're a dumb, fumbling beginner but want to learn and start this trading journey? Yes, my friend. Yes. Welcome. I was once where you are. I was once where you are. I promise. Feel free to ask questions. And check out Albrooks. That's where I learned most of my shit from. But you can also, if you're curious, man, you can get my 3 favorite trades. Hit that link on the screen, tradesbybren.com/3setups, and you can get a document that I've made for you with my 3 setups, and I explain the patterns I look for and how I limit my risk and also how I set my profit targets. Some good starting points for you. Obviously, it's up to you the way you trade, but if you want to take some ideas from what I do, you're welcome to. $26 looking good coming into the close here. Minute and a half on the candle. Minute 45 rather. Bulls trying to get that higher low. Keep this bull trend in order. They have every reason to. Two-minute chart showing already what we want to be seeing.
Why are you so antisocial? Because I'm trying to get it. Why are you staying on the basketball court so much? Because I'm trying to get it. Why are you out there practicing in the hot sun when ain't nobody else out there? Because I'm trying to get it.
Practice.
Why are you not clubbing? Like every time I text you and invite you to go do something fun and cool, you always studying? Because I'm trying to get it. Let me tell you something, homie. These women ain't going nowhere. These clubs, these parties, all this shit ain't going nowhere. The more weird you are is a reflection of how committed you are to focusing on your shit.
How committed are you to focusing on your shit? That's the question of the day. If you came to Trades by Brent, expect to be challenged. That's just how I roll. How committed are you to focusing on your shit? Okay, so 26 was trying to close bullish, but just couldn't get it done. So let's see what happens here. Let's see if the bulls take that as the sign of the bears failing, or if the bears take that as a sign of the bulls failing. We'll have to wait and see how 27 closes. Corpusful, welcome to the chat. Because I'm trying to get it. Because I'm trying to get it. Because I'm trying to get it. Daily chart. No, hourly chart. Look what you've done. We're going to see how 27 closes. Remember to hydrate. Look what you've done. Look what you've done. My words. Hey. Hey. This is how we play. Clicking buttons, making money every day. Only day trader on YouTube that can freestyle rap. I attack the charts and make them do what I want to do because I'm through all these fakes and phonies. Making money. I mean money. That's my job. And I do it. Oh my God. Look what you've done. Welcome to Trades by Brand. We're having fun. Oh yeah, come on. Trades by Brand. Come for the trades. Stay for the fun. Oh, quick question for my man, Mr. Money Mouse. Mr. Money Mouse, how did you find my stream, my friend? Would love to know how you found us here. What you done? $27 strong bull close. That's what we want to see. Exactly what we want to see. Hello. Hello, how you doing? I'm Brad. Nice to meet you. Hello, I'm Brad. Nice to meet you. Welcome to my channel.
Phantom.
28 week. See if the Bulls take advantage of that. $28 looks exactly like 15. Wow. Looking for the breakout here. See if the Bulls get the breakout. A lot of resistance here for some reason. Context still favors the Bulls though. Come on, come on. Come on, Bulls. This is following the pattern of a channel perfectly. This is perfectly following the channel pattern of a channel. Starting here, you get a move up. We get a pullback. Find buyers. We go a few points higher than the prior high. We pull back. Again, we find buyers somewhere lower and start pushing up again. So that's how a channel works. Slowly drifting up. You know, it looks pretty weak, right? But if you zoom out, like, and we can do that by going to a 15-minute chart, you see, oh, actually, yeah, it's definitely bullish, right? But on the shorter time frames, it doesn't look that bullish because you have, you know, a lot of sideways and you have pullbacks. So if you're holding long, like I'm doing swinging, it requires a lot of patience. Come on. Damn. Let's get a nice close here, bulls. Let's get that breakout above the trading range. Take this thing higher. 30 seconds left on the candle. 30, 29, 28, 27, 26, 25, 24. Let's watch this candle. See what happens into the close of the candle. 20 seconds. 19, 18, 17, 16, 15, 14, 13, 12. We're going to see what happens into the close. Last 10 seconds of the candle. See if the bulls continue to buy into the close or if we sell off and we get a tail. We want the candle to close on its high. And we did. Good. So good for the bulls. We'll probably see a push up here. At least that's what the odds would favor. Okay. So we had delayed follow through. 27, strong bull signal. 28, sideways, right? You had a doji candle, that's sideways. And then we got the follow through on 29. Okay. So 29 gives the bulls reason to start buying again. But we're still in this trading range here, so we'll see. I'm still bullish. Still favors the bulls though. I'm still bullish. 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 Ha ha ha. Take the price. Fly, fly, fly. Up. Higher. Trade goes against me. I get a little perspiring, tiring to sit here and wait and watch. Might need to take a break from staring at this box on my desk. Rest is what you gotta do sometimes. Oh man. It's a vibe. I will never get over what a mindfuck trading is. Again, extend that trend line. It's matching that moving average perfectly, which is what you'd expect in a bull trend. So bulls unwilling to buy high. Well, but you know, they are willing to buy low. So that's a channel. It's a typical channel. It's a vibe. 10-minute chart. It's amazing how much more bullish it looks just by going up one time frame. Just from going from the 5-minute chart to the 10-minute chart. It's amazing how much more bullish it looks. I mean, I don't know if that's how that looks to you. But if I go from here, it's like, okay, bullish, but kind of weak. But then if I go up to a 10-minute, I'm like, like so much more bullish.
Sunny Gerstner.
Okay, I'm gonna tighten my stop because it's been over an hour, right? I said I'd reevaluate at 850. It is now 910, so I'm gonna trail my stop, which puts me at a 1.5, 1.5 point stop loss, right? Just below this prior low here, okay? And we're trying to make a new higher low. So I'm okay with that. We'll hold for that profit target. If the market was moving, right, if this bull trend was stronger, I'd probably want to go for that bigger PT. But I'm good with the shorter one because the market's lacking conviction, lacking strong conviction, right? Bulls keep running into resistance right around here. And that's about as long as I like to trade. So I will keep this trade open. And I will hold for that profit target. Give it another hour. But that's going to do it for the stream. So thanks for being here, guys. I appreciate you. I'm Bran, and let me make sure that you know I'm grateful for you. I'm here every Tuesday and Thursday, 7 a.m. Pacific. That's when we do this. And if you want to get my 3 favorite trades, check tradesbybren.com/3setups. The link is also in the description. Also, I'm trading, well, I'm a funded trader with Top Step. So if you're curious about getting information from them, hit the link in the description as well. And I'll see you next time. Have a good one, guys. Much love.